Good morning, everybody. Corey Insurance Nova here with Atkinson, and today is What's in a Policy number 17, and I want to talk briefly about what goes into, what impacts or what affects the actual homeowner's insurance rate that you get on your home. So I talk a lot to loan officers and realtors about being an asset to their client by having an insurance agent on their team, because there's so many factors that go into what can impact the insurance score. They're really going to be a good asset to them by helping them to get ahead of it, reaching out to an independent insurance agent early in the process, as soon as they're ready to put an offer in on a home. So that way we can find out then and there what's going to be the best route to go forward with them. Because if you just call a captive agency, as I spoke about before, they can only offer you one product, or they're not going to be able to insure you at all. With our agency, having all these carriers, we have a lot better opportunity to be able to make sure we're meeting your needs and getting you covered properly. So just to go through this, I have 16 things that kind of come into play when finding out exactly what your insurance rate may be affected by for your homeowners. So the replacement cost of your home. If you look on your homeowner's policy, that's generally what your policy is based off, is the dwelling coverage of your home. So depending on what that cost is and the cost to replace your home and to rebuild your home, that's going to be a big one. If you have additions to your home, you'd want to tell your insurance agent that, so that cost can be built in and we can raise your dwelling coverage. Okay. The deductible you choose, whether it's $500 or generally standard $1,000, there's usually a pretty good percent, possibly saving as much as 25% when you switch from $500 deductible to $1,000. I would say 80% of the people, maybe 90% of the people that I take care of it and insure have $1,000 deductibles, if not more. So 500 doesn't even seem to be a really go-to. You're looked at more of a liability with lower deductibles. They kind of reward you with a higher deductible. The type of dog you own. A lot of people still have a hard time with this question when we're going through the application. I say, do you have any animals? Yes, I have a dog. Well, what type of breed do you have? And they kind of hesitate because they don't understand why I'm asking that. There is the the high-risk dog breeds that are still looked at as a danger to a lot of insurance carriers. Some may not have this issue at all, and they don't care, and they won't ask you. But as an independent agency with all these carriers, we have to ask. That way we know that one carrier may or may not work for you depending on the type of dog you have. So I'll put more information on those dog breeds as well, just so you have an idea. You may have the softest, most lovable dog ever, and it's one of these breeds, but the insurance company doesn't care. It's one of those breeds. The type of stove you have. Most people in newer homes have gas fireplaces. But if you have a wood-burning stove or an insert, that can impact the policy premium. It could be more of a risk, a little bit more dangerous. So that's something sometimes that has to be noted on the insurance policy. If you have a home-based business, you're going to want to make sure that your things are covered additionally in the event that you have a home-based business, whether you have a fax machine, a copy machine, files, or whatever you may have in your home. You might want them covered in addition to make sure they're covered properly. So sometimes there's an endorsement on your homeowner's policy that you can add for a home-based business. The remodeling, I mentioned that briefly. A friend of mine actually is finishing his basement. What we need to do as he's getting closer to the end is kind of reassess the dwelling coverage. Now he's got a finished basement as opposed to a non-finished basement. So we're going to have to go into our replacement calculator, add that in, maybe whether it's builder's grade or is it custom, and that'll calculate a little bit more of an increase in dwelling coverage, so we make sure that he's covered appropriately. Your liability limits. The minimum amount of liability generally you could have is $100,000, and it goes up to $300,000, $500,000, almost $1 million. The small incremental financial change of going from $100,000 to $500,000 sometimes I think is like $20. So we always put you at least 500, or at least I do, put you at 500,000 to start from, because the value of having 500 over 100,000 is so great that it only makes sense. So obviously that liability is going to cover if somebody gets hurt on their property, slander, other things that might happen in the event that you're going to get sued. So we want to make sure that you're covered the best you can be there. Your insurance score, that's made up of a few things. Claims history, your credit score. That insurance score pops up in the system with most of my carriers. That doesn't directly relate to your credit score, but it is impacted and associated with it. Marital status. Generally, a lot of times, married couples are looked at for having a lower risk and lower chance of having a claim. I don't do the stats, I just read them. So I don't know the actual math behind that, but that's how it's looked at. So if you are married, sometimes there's going to be some additional discounts or incentives for that. The age or construction of the home. Newer homes, newer construction, frame built, those are going to be a lot better rate than a home that has been 50 years old, that may or may not have an updated roof, that may or may not have an updated HVAC. Those things are looked at as higher risks, and that's going to make your premium higher. Having a swimming pool, hot tub, or outdoor spa, or trampoline. Those are all big risks. I don't deal much with the hot tub or the outdoor spa part, but pools, there's a surcharge on those. Some companies don't write them because they have a pool with a diving board or a pool with a slide. They won't write the policy either way. Trampolines, another big liability. Some people will make you sign an exclusion waiver saying, hey, if you have a claim based on the trampoline, we're going to decline it. You know, we're not going to even cover that. So you have to sign a waiver saying, well, I understand my risk and we're not going to be covered. Some people will put a surcharge on it. Some people, as long as your trampoline is caged in and has proper netting on it, you're in good shape. You don't have to worry about it. So there's a lot of variables that go into just that. I mentioned that before. Condition of the roof. If you have a newer upgraded roof, you're going to be less of a liability in the event of a claim. They're not going to blow off as likely in a storm or in a snowstorm. They're not going to be damaged as likely. So having an updated roof is definitely a good thing for an insurance policy. How close is your home to a fire department or water source? So we have protection classes, and generally it's from a 1 to a 10. A normal community like that I live in, you know, kind of cookie cutter, swim pool down the street, there's businesses around and all that, that's generally a protection class C. We are very close to fire, we're very close to a water source, we're less of a risk. As you get higher up, when you go to protection class 10, basically you're someone that maybe lives on, in my opinion, a few acres, and you're a few miles away from any type of civilization, and it's going to be a much higher chance that if there's a fire, that it's going to take longer for somebody to get there to put the fire out. So that creates a higher premium itself. Once again, your credit history, that has a lot to do with it. So keeping good credit, keeping a decent balance, you know, not having any outstanding credits. Your claim history, here's another big one. If you've had claims within the last 5, 7 years, those follow you to a new home. Okay, they'll stay attached to you. If there's already a claim on the home that you're considering buying, that is also going to be impacting your premium. So even though you had nothing to do with the claims at the new house you're buying, that is looked at as more of a risk at that property. If they had a few thefts, it's going to be a higher risk in that area. If they've had a few wind claims, that home's going to be of a higher risk of it happening again, according to an insurance company. So in general, these were 16 things just to think about that can impact your homeowner's premium rate. A lot of these things, like I said, you may or may not be in control of those things. The house may come with a certain fireplace, or you can't afford to buy a new roof, or your credit score is already what it is. That's fine. But when you come to an independent insurance agency like Corey Insures Noble Atkinson, we have a lot of options to be able to get you into the right policy and to make sure you're covered without sacrificing coverage. So with that being said, if you know anyone that can benefit from my services, please share my information. Share this video with anybody you know that can benefit, which is everybody. I hope you all have a great day, and we'll talk to you soon.